Something very unusual is happening in the American economy, and this chart shows it clearly. For the first time in more than 30 years, two important lines have moved in opposite directions. One line shows how confident people feel about the stock market. The other shows how they feel about their own financial future, and the gap between them has never been this wide. The blue line measures confidence in the stock market. It is near record highs, even higher than the extreme optimism seen in the year 2000 during the dot-com bubble. People believe stocks will keep going up. The white line tells a very different story. It comes from the University of Michigan and measures how Americans feel about their personal financial outlook. This line has crashed to levels last seen during the 2008 financial crisis. This split has never happened before. It signals that something deep inside the economy is breaking, and it cannot be fixed without a major reset. In simple words, Americans trust the stock market, but they do not trust their own future. Their savings feel smaller, their income feels weaker, their daily life feels harder. To understand why, let's look at real personal income growth. From the 1960s until the early 2000s, income in the United States grew at a steady pace of almost 3% per year. After adjusting for inflation, people could predict their future earnings. They could plan a home purchase, raise children, or build a retirement fund because they trusted that their income would keep rising. Economists call this idea permanent income. But after 2008, income stopped following its long-term path. Growth slowed and then fell behind. When someone in 1999 expecting a certain salary by 2019, that expectation was never met. Now imagine someone in 2015 expecting a certain income by 2025. That expectation will likely fall short too. The gap keeps getting wider. Meanwhile, the stock market has done the complete opposite. Real personal income has grown about 50% since 2010. The S&P 500 has grown almost 300% in the same period. Even after adjusting for inflation, people feel poor, but markets feel rich. This is why the surveys look like they belong to two different countries. There is no way this can continue forever. Financial markets cannot keep going up if real incomes remain stuck. Something must reset. Other stocks fall back toward the real economy, or incomes rise sharply to catch up. History shows that these imbalances always correct themselves, and the correction is usually painful. This is why economists warn about a coming reset. It may come in the form of falling asset prices. It may come through policy changes that affect corporate profits. It may come through inflation or higher taxes. No one knows the exact trigger. What we do know is that a system cannot stay unbalanced forever. Until the gap between income and asset prices closes, the pressure will keep building and the signs of stress will keep appearing. Just like these two lines on the chart drifting farther and farther apart.